Good morning and welcome to another day of market analysis. Today, we're diving into the latest market updates, focusing on the ASX, Wall Street, and the broader global economy. Get ready for a deep dive into the world of finance, where every post is a winner, but none should be construed as financial advice. ASX 200, a rough start. The ASX 200 is off to a rough start this morning, with futures pointing to a 1.8% retreat on opening. This comes on the heels of a 1% loss on Friday and a 4% decline across the week. The market is feeling the heat from the conflict in the Middle East and the surge in oil prices. Materials, real estate, and consumer discretionary sectors are among the biggest losers, while energy and IT sectors are showing some resilience. Wall Street, a bleak start. Wall Street is also feeling the pinch, with the S&P 500, Dow, and Nasdaq all taking a hit. The U.S. oil benchmark, West Texas Intermediate (WTI) crude, jumped more than 12%, while the global benchmark, Brent crude, was up almost 9%. This is causing a lot of anxiety and volatility in the market. U.S. banks are also taking a hit, with the S&P 500 bank index losing more than 2%. Global inflation and interest rates. The inflation fears, sparked by higher oil prices, have led to a rise in global interest rates. U.S. 2-year Treasuries rose 16 bps over the week, UK and German 2-year yields rose 35 and 30 bps respectively. Borrowing costs in Australia and Canada both rose around 20 bps last week. This is a concern for the RBA, which is facing a dilemma when it meets later this month. Cutting rates to fix the crumbling jobs market has significant risks at a time when inflation is likely to be arcing up. Stagflation, a looming threat. The situation is made more complex by the threat of stagflation. The U.S. is again facing the threat of a protracted period of weaker economic activity, entrenched inflation, and elevated unemployment. The deterioration in the U.S. jobs market and the spike in oil prices have raised concerns about the return of stagflation. The longer the war drags on, the higher the added stagflationary risk to the U.S. economy. A week of data and insights. This week, we have a quiet data front, with the ABS taking a breather after the national accounts last week. The Westpac Melbourne Institute Consumer Sentiment Index softened in February, largely due to the expectation of rising interest rates. The March survey, Tuesday, takes into account the escalation of war in the Middle East and surging fuel prices, so don't expect a sudden outburst of optimism. NAB's business survey, Tuesday, covers February, before the war and before oil prices took off. Conclusion. In conclusion, the market is facing a lot of challenges, from the conflict in the Middle East to the threat of stagflation. The RBA is in a bind, and the Fed is facing a difficult decision when it meets later this month. As always, the game's afoot, so let's keep an eye on the market and see how it unfolds. Stay tuned for more updates and insights.